Now, the overall inflation rate has significantly improved, easing the strain on consumers and on business. With an interest rate cut expected next week, there seems to be some more good news on the economic front. The Reserve Bank of Australia's recent data shows inflation now 2.4%, comfortably within their target range, providing hope for continued stability ahead. So will they or won't they cut rates this time? What do you think?
I think they will, and really on the basis that they haven't said that they won't up until this point in time. And the reason for that is effectively we've had a spate of data recently that has shown that inflation is kind of slowly returning to target. Obviously on a headline basis it's back in the mid-2s. When you take out those energy subsidies from the government, it's in the low 3s, and suggestive that things are starting to trend towards that kind of 2 to 3% target band on that crucial trend mean figure. When you combine that with obviously clear signs that the economy is weak, it gives the RBA fair impetus, markets, a fair reason to believe that rates will be cut. The reason why I think that they will do it because of this recent data is that there's been no commentary since that CPI release at the end of January to push back on market pricing. Now at about a 90% probability that it will cut next week. So the foundations seem to be set there for a rate cut. There can be arguments as to whether they should do it or not, but based on, again, the evidence here, it seems that they probably will.
The evidence in Australia, but no doubt they'll be looking to see what happened in the United States after the emergency rate cut last year of 50 basis points, because then you see that inflation started to trickle up again in the US. Will the RBA be worried about the message that a rate cut would send to the market, that they end up back in the same spot?
Possibly. I mean, if you do look at what's happened in the United States, and arguably the rate cuts we've already seen has helped sort of support the labour market, even in the last 3 or 4 months, which would be a fairly quick response to rate cuts in an economy, but it's not impossible to envisage. More or less that the 100 basis points of cuts that we've had from the Fed since, September last year, might have been a little bit too extreme, and we're certainly likely seeing the Fed on pause now for an extended period because inflation is sticky, as we saw this week, and the labour market is still really strong. In Australia, the circumstances are a bit different because the demand environment in the United States, even when we did see that kind of slight labour market shock, was really quite strong still. We're not dealing with those sorts of pressures. In fact, the RBA has told us extensively over the last 12 months or so their concern is more with the supply side of the economy and trying to bring things back into a balance a little bit. So,
well, speaking of the supply side, wages rose 11.2% in 3 years. Essentials like gas, insurance, and if anyone's gone to the supermarket, eggs are all up about 40% as well, and some things continue to increase. Talk to us about whether that will play into what the RBA is thinking.
It's a hard one because this is when you start talking about the differences, and I have this conversation extensively, especially in the office with guys who are trying to digest the impacts or the reasons for Trump's election, which was basically an inflation vote. People were unhappy with the economy.
But now it's his problem.
It is his problem. The point is, though, is that there can be a difference between what the data tells you and people's perceptions or people's experiences. And the thing is that when you do look at what the RBA tries to track in setting policy, they're trying to strip out a lot of those things like energy and food, which are very noisy and they can't really control, and look at some of those underlying pressures that they can and adjust policy accordingly. So even if they do lower interest rates, it probably won't won't solve the issue with perhaps energy markets which you can't control. It won't necessarily solve problems relating to sort of food prices. Those things that when you look at the bottom, when you look at sort of the distribution of how inflation impacts people, those kind of necessities, the prices are still going up, and putting pressure on those households. But the RBA can't really solve that with an interest rate cut. So on the one hand, the RBA will be obviously fairly cognizant of these issues because it always acknowledges inflation doesn't impact everybody equally, but at the same time they can't really do much about those sorts of things, and unfortunately it means that these things won't be solved with an interest rate cut, or certainly a 25 basis point interest rate cut in the short term.